Hello viewers, after 2 units of principle of insurance and loss assessment, today we are going to start a new unit in this subject. So welcome again. This is the syllabus which we will cover. Today we will see the unit 3. The name of the unit is Fire and Special Perils Insurance. So today we will talk about fire and some special pearls which can be insured. So today's topic of discussion are introduction to fire and special pearl insurance. Then we will see what pearl we can cover under these policies. Then we will see some general exclusions. After that we will move on and see policy conditions. After that we will see extensions, that the covers we can add in our base policy, and after that we will see escalation clause. So this will be the content of discussion today. So first let us see the introduction about fire and special pearls policy. So what it means, fire and special pearls insurance is a named pearls property insurance policy that covers loss or damage to insured property caused by fire and other specified pearls subject to terms, conditions and exclusions. So what we will do, we will see what pearls we can insure and what the conditions under which these pearls can be insured. So this is the subject matter which we can insure under these policies. I have talked about subject matter in my last videos. So if you have not seen those videos, please go and watch them so you can understand what subject matter means. So for those who have seen the lecture, the buildings can be insured, the electrical installations can be insured, contents of the building can be insured, and goods can be insured, utility, boiler, water treatment plant, these also can be insured, furniture, fixtures, fittings, these can be insured, and pipelines can be insured. These are some of the examples. Of course there may be some more things which can be insured under these policies. I am listing some because you can understand them better. So now we will see what kind of pearls means hazards, you can say, can be insured in these policies. So first is fire. In fire policy you can cover everything, but excluding these 2 points, or you can say 2 things. The first is excluding destruction or damage caused by property insured by, first is its own fermentation, natural heating or spontaneous combustion. Okay, if some good or something ferment with time by natural heating or spontaneous combustion, it cannot be insured under fire policy. Another type is it's undergoing any heating or drying process, like in baking industry, the material goes heating and drying process. So in this condition we cannot insure these kind of things. Second, what cannot be insured is burning of property insured by order of any public authority. Okay, if any building or property is being burnt by any public order or any public authority, so we cannot insure it. Okay, please note, spontaneous combustion can be covered at extra premium. Okay, if you want to cover spontaneous combustion, you can take an add-on and can pay some extra premium to cover it. Okay, so I am talking what cannot be covered. Anything else can be covered under fire policy. Okay, second is lightning. Okay, second is lightning policy, you can say, like fire policy, you can take a lightning policy too. Loss or damage caused by lightning strike can be claimed under these policies, included under act of God pulse. Okay, so this is included in act of God pulse. So these are the two types. Another type is explosion or implosion. So implosion cover excludes loss, destruction of a damage. Okay, so what cannot be covered under this policy? So this is the boilers other than domestic boilers or their contents resulting from their own explosion or impulsion. So this cannot be covered, and caused by centrifugal forces. Any damage which is caused by the centrifugal forces, this cannot be covered under this policy, explosion and implosion. So note, this risk be covered by boiler explosion policy in engineering insurance. So if you want to cover these two risks, you can insure it in engineering insurance. Okay, another type of insurance which you can take, that aircraft damage you can insure. Destruction or damage caused by aircraft or other aerial or space device and articles dropped from excluding those caused by pressure valve. So this can also be covered, except pressure valves, damage caused by pressure valves, you cannot cover this. Okay, another is right, strike and malicious damage. You can also cover these damage also under this policy. Loss of or visible physical damage or destruction by external voice. Okay, if right happens and damage property is insured under this policy, right, strike and malicious damage policy, you can claim it. It means external voice means directly caused to the property insured by right, strike and malicious. Okay, so something is damaged from the right, strike or malicious damage which is written in this policy, you can take insurance against it. Terrorism damage exclusion warranty. So what it is? So generally you cannot take insurance against terrorism, but you can insure terrorism also. How we will see through this slide. Notwithstanding any provision to the contrary within the insurance, it is agreed that this insurance exclude loss. Okay, so terrorism is not covered under this policy, right, strike and malicious damage policy. But let's see, damage, cost or expenses directly or indirectly caused by any act of terrorism, this is excluded from this policy, right, strike and malicious damage. For the purpose of this endorsement, an act of terrorism means an act including but not limited to the use of force or violence and or the threat thereof of any person or groups of persons, whether acting along or on behalf of or in connection with any organizations or government committed for political, religious, ideological or similar purpose, including the intention to influence any government or to put the public or any section of the public to fear. So okay, this is the general definition of terrorism, you can say. So this is not covered in the last policy. Terrorism cover when the insurer opts for terrorism damage cover by paying additional premium as provided. Okay, so you can cover terrorism, but you have to pay extra premium for it. Cover will be granted by attaching an endorsement. Terrorism cover will be a separate cover which can be granted only in conjunction with right strike and malicious damage cover, RSMD we can say it in short form. Terrorism cover will not be given in isolation without RSMD cover. Okay, so what I have told, I can summarize it this way. Like if you want terrorism cover, you have to take right strike and malicious damage cover, but you can pay some extra premium and you can opt for terrorism cover with this policy. With this policy, RSMD policy, but you cannot take terrorism policy alone. Okay, I hope I have made my point. I know that the language written here is very difficult for engineers, but I have made some effort to try to teach you what it want to say. Okay, what deductibles are here? So you know that some deductions are there in every policy. So in terrorism, what is not covered? Every claim under terrorism cover will be subject to deductible as under. If it is industrial risk, you have to see 0.5% of total sum insured subject to a minimum of rupees 1 lakh. Okay, so this is deductible. Okay, you will deduct 0.5% of total sum insured. Okay, subjected to minimum of rupees 1 lakh. I mean to say that insured has to pay rupees 1 lakh minimum. Okay, non-industrial risk, what will happen? 0.5% of the total sum insured subject to a minimum of 25,000. Okay, if it is non-industrial risk, you have to pay minimum 25,000 or like 0.5% if the amount is very high. Okay, I hope it is clear to you. Next we will see another type of insurance, which is storm, cyclone, typhoon, tempest and hurricane, tornado, flood and inundation. Okay, so this is also a type of policy. The natural peril cover is defined as loss, destruction or damage directly caused by storm, cyclone, and this type of peril, excluding those resulting from earthquake. Okay, so you have to note it that anything happened by earthquake, volcanic eruption or other convulsions of nature, whether earthquake cover is given as an add cover. The words excluding those resulting from earthquake, volcanic eruption or other convulsions of nature shall stand deleted. Okay, so you have to keep in mind this thing. I am not saying that earthquake is not covered or volcanic eruption is not covered, but I am saying that anything happened because of earthquake, volcanic eruption is not covered. Okay, you can take an add-on and add earthquake damage but you cannot take cover anything which is happened due to earthquake. Okay. Another is impact damage, loss or visible physical damage or destruction caused to the property insured due to impact by any rail or road vehicle or animal by direct contact not belonging to or owned by. Okay, you can take impact damage also. The insured or any occupier of the premises can take it. Okay, and their employees while acting in the course of their employment. These two can opt for this impact damage like policy. These are some more types of pearl which can be covered under fire and special pearls policies. So the eighth type is subsidence and landslide, including rock slides. You can insure against it also. Okay, the loss, destruction or damage directly caused by subsidence of part of a site on which the property stand or landslide, rock slide. Okay, if your house is located near any hillside, so you can opt for this. The normal cracking, settlement or bending down of new structure can be covered, cannot be covered. Okay, the normal cracking cannot be covered. The normal settlement or bending is not covered. Another part is demolition, construction, structural alteration or repair of the property or groundworks or excavation. These two are not covered in this policy. Okay, A and B, these two are not covered in this policy, except it remaining is covered. Okay, these are also some type of policies which you can take. So I have only named them. It is not very important for your exam point of view. These also, some of them are not very important, but you should know what you can insure. Okay, these are some general exclusions. Okay, when you take some policy, so these are general exclusions that you should know, which is not there in the policy. Okay, so the policy does not cover what it does not cover. I will try to tell you in these points. The first 5% of each and every claim subject to minimum of rupees 10,000 in respect of each and every loss arising out of act of God pearls such as lightning, STFI, subsidence, landslide and rockslide. These are the type of policies we have discussed. So you cannot opt for 5%. Okay, first 5%. Okay, minimum 10,000. Example I have written here. The claim amount is 4 lakh. 5% of 4 lakh is 20,000. Insurer pays 3 lakh 80,000. First 5%, if it is less than 10,000, insured pays 10,000 minimum. Okay, if you have taken any insurance, so you will pay the 5% or minimum 10,000. Okay, this is your responsibility. Okay, what point we say, the first rupees 10,000 for each and every loss arising out of other pearls, the excess is not applicable to the dwelling. Okay, so if you are opting insurance for dwelling, it is not applicable. This clause is not applicable. Other than dwelling, this clause is applicable. Okay, loss, destruction or damage caused by bore or any kinder pearl, like if bore type situation happens, these policies does not come into effect. Okay, loss, destruction or damage directly or indirectly caused to the property insured by nuclear pearl. Okay, so this is not insured. Okay, this is general exclusion. Loss, destruction or damage caused to the insured property by pollution or contamination, excluding these two are covered. Pollution or contamination which itself results from pearl hereby insured against. Okay, you can take for this policy, so it is covered. Any pearl hereby insured against which itself result from pollution or contamination. Okay, something resulted from pollution or contamination, you can take cover for it, otherwise you cannot take cover. Okay, another is loss, destruction or damage to bullion. Bullion is precious jewelry type, silver, gold, these are bullions, or unset precious stones, you cannot insure those. Okay, curious, or you cannot take insurance against them. Okay, art, for art you cannot take, if it is above 10,000 rupees, you cannot not take insurance against it. Okay, you can not take insurance for drawings, stamps, coins or paper money, checks, books of accounts or other business books, computer system record, explosives, etc., unless otherwise expressly. Okay, if it is not written in the policy, you cannot take policy for these things I have mentioned here. Loss, destruction or damage to the stock in cold storage premises caused by change in temperature. Okay, you cannot take insurance for any temperature change. Next point H is loss, destruction or damage to any electrical machine, apparatus, fixture or fitting arising from, occasioned by overrunning, excessive pressure, short circuiting, arcing, self-heating or leakage of electricity from weather caused lightning included, provided that this exclusion shall apply only to particular electrical machine, apparatus, fixture or fitting so affected, and not to other machines, apparatus, fixtures or fitting which may be destroyed or damaged by fire. So set up. This is known as electrical risk exclusion. These risks can be covered under machinery insurance policy. Okay, you can insure all of this in engineering insurance, but generally it is excluded. Okay, because it is engineering insurance, it is in engineering insurance, you can take separate insurance for them. Okay, it is to be noted that only damage to the particular electric machine etc by specified electrical risk is excluded, but resulting fire damage to other machines etc is covered. Okay, if it is damaged by fire, you can claim it. If it is it is happened due to the overload or anything, short circuit, you cannot cover it in fire damage. Okay, expenses incurred on architects, surveyors and consulting engineering fees and debris removal necessary included from insured following a loss, destruction or damage to the property insured by the insured pearls in excess of 3% and 1% of the claim amount respectively. Okay, so this also is excluded from the cover. Okay, please note, cover for expenses in excess of 3% and 1% can be arranged by endorsement. Okay, you can endorse it and can claim it. If it is not endorsed, you cannot claim it. Okay, the other exclusions under the policy are, so some more exclusions are listed here. What are those? Loss or damage by spoilage from the interruption of any process caused by any of the pearl covered. Okay, this is not covered. Okay, if interruption happened due to some pearl, it is not covered. Loss or damage by earthquake, it is not covered, I have told you. Loss or damage to insured property, it if removed to any building or place other than the insured premises, except machinery temporarily removed for for repairs etc for a period not exceed of 60 days. Okay, so these are generally not covered, but you can take insurance against them too by specifying these things. You write in your policy, you pay extra premium for them, you can opt for them also. Okay, like earthquake I have told you. Okay, but generally in fire policy or special peril policy, this is not included. Okay, so please keep in mind. I have one MCQ on it, that earthquake is insured under fire and special policy. So if it is not explicitly mentioned in the policy, it is not insured. Okay, the last point is theft during or after the occurrence of any insured pulse. Okay, if theft happens during and after the occurrence of any insured pulse, it is not covered. Only the damage which is happened by any pearl is covered. Okay, it is written in the note. I have written an add-on cover is available for ABC. For these three, add-on cover is available. For theft during and after occurrence of any insured pearl, it is not insurable. Okay. So I hope these points are clear to you. If it is not clear, you can read them by pausing the pausing the video, and you can read it. These are very simple. I know this is written in the language of law, but these are not very tough to understand. Okay, sum insured, we can calculate the sum insured by two methods. First is market value basis or depreciated value basis, which is arrived at by deducting depreciation from its present day replacement value. Okay, in insurance we do not pay for uh, replacement. Okay, we pay for present day replacement. How? We calculate depreciation for the material or for the good or for the item, and then we calculate fair value or today's replacement value, and we give insurance amount. Okay, another method is reinstatement value basis, so which is arrived by reinstating the property with same kind of type or by new property. Okay, so we compare property, okay, which is like my insured property, and we estimate the value and we compensate the loss. Period of insurance, so usually 12 months is the period, expires at midnight on last day. Okay, what happens at the last day of the 12th month, the policy expires at midnight. Okay, the policy can be taken for short period by paying short period rate. Okay, so you can opt for shorter period also, but you have to pay accordingly. Premium rate, what is premium rate? The amount you pay monthly or yearly for taking insurance is called premium. And how premium rate is calculated, it depends on the following. So nature of the industry is the first parameter. Nature of storage in open or inside building, etc., it is also dependent on it. Nature of the property, remember it vary from nature of the property. Nature of operation or construction or proceedings, and nature of segregation of property. These are the factors which affect the premium rate. Now we will see some policy conditions. Okay, so there are several policy conditions. I am listing just general things here. In detail, the policy document will tell you what the specified things are. So 3.8.1 refers to misrepresentation, description or non-disclosure of material facts, such as event the policy becomes voidable. Okay, if something happened like that, the policy becomes voidable. 3.8.2 covers refers policy cases after 7 days from the date of fall or displacement of any building or part thereof, insurer can continue on a revised term. Okay. uh, 3.8.3 refers to discontinuing risk. They will discontinue the risk if there is any change in risk insured, must inform it. Okay. If you have done any change, you have to told your insurer. Okay, according to this clause 3.8.3. Okay, 3.8.4, if there is concurrent marine policy claim will be preferred in marine and then under fire. Okay, if this is the situation, you have to tell. 3.8.5, cancellation of policy by insured on short period basis of premium rates, cancellation of policy by insurers on pro rata basis on premium rates. Okay, if you want to cancel the policy, if short period is there, so this clause govern it. 3.8.6 refer to duty of insured after happening of claim, notice of claim, 15 days to file claim details of other insurers, going to court, arbitration, etc. Okay, so what are the duties of insured? What will be the period of notice of claim? So this is also governed under 3.8.6. Likewise, 3.8.7 refers to rights of insurers after the happening of claim. Okay, what are the rights you have to see in this clause? This does mean that insured cannot abandon damaged property whether the insurer takes possession or not. Okay, you cannot abandon the property as per this clause. 3.8.8 refers to fraudulent false claim, willful negligence, etc. All benefits will be forfeited. Okay, so 3.8.9 refers to option available to the insurance company to reinstate or replace instead of paying claim. Okay, they can reinstate according to this clause when insured prefers highly aggressive claim. Okay, so these are the clauses under which some general things governs. Okay, 3.8.10 refers to the condition of average. So what happens if averaging is there? When sum insured selected in policy is lower than its value, okay, it's under an insurance. This is the condition of average, and insured is expected to insure his property for its full value. In the event of claim, if it is found that he is not covered the property for its full value, then he has to bear the proportion of the claim on his own account. Okay, so how it will happen, let's see by an example. So if C, value of the property is 2 lakh and sum insured is 1,50,000 and you incur a loss of 80,000. Okay, so you have not insured the property for 2 lakh. Okay, so what will happen? The amount payable will be sum insured 1,50,000 upon value of the property 2 lakh multiplying by loss. What loss you have incurred? 80,000 loss you have incurred. So 60,000 will be the amount payable. Okay, so this is the averaging. So you have underinsured the property, so you will get 60,000, not 80,000. 20,000 will not be paid to you. Okay, so 3.8.11 refers to the condition of contribution, that is risk covered in more than one policy. I have discussed it in my previous lectures. 3.8.12 refers to condition of subrogation, that is if third party is responsible for causing damage. I have also discussed about subrogation principle. 3.8.13 refers to the provision for arbitration. Okay, so this term 3.8.14 refer to all communication to insurers in writing or printed. So you have to follow all the formal communication according to this clause. 3.8.15 refers to reinstatement of sum insured, that is after the claim is settled, the sum insured is required to be reinstated by paying premium. Okay, so these are the general policy conditions which I have listed, and these are the clauses you have to refer to while taking any policy. I think these are the two last slides. After that, I will end this session and we will continue in our next session. Just to see these two slides only. These are the extensions you can take. These are the add-ons. In general terms, we say add-on. So you can take these covers also with your base policy. So architect's fees you can cover in excess of 3%. You can take add-on for it. Debris removal expenses in excess of 1% of claim amount, you can take add-on for it. Deterioration of stocks in cold storage premises due to temperature rise, you can take extension. In general exclusions, I have told you that it is not covered there. Spontaneous combustion, you can take add-on for it. Forest fire, impact damage, for can take insurance for these also. The earthquake insurance is an add-on. Okay, it is not in base policy. Spoilage, material damage, cover under a separate item in the policy, you can take add-on for it. Temporary removal, you can take add-on. Loss of rent, okay, if there is loss in your commercial property due to rent, you can take add-on for it. Startup expenses, you can take add-on for it. Escalation clause, okay, so we will see escalation clause here. Okay, what is escalation clause? This clause applicable to policies of on buildings, machinery and accessories only, can be incorporated in policies on payment of additional premium. Okay, this clause allows automatic regular increase not exceeding 25% in the sum insured throughout the period of policy. The automatic increase operates from the date of inspection up to the date of occurrence of any insured peril. Pro rata condition of average will apply as usual. So, okay, you can opt for explanation clause, and this increase will happen automatically, not exceeding of 25%. Okay, so you have to remember you cannot exceed 25% while taking explanation clause. Okay, for today I am ending this session. We will continue special policies in the next session. I hope this is pretty much clear to you. I know we are law students, so everything will not be clear, but I tried to make things simple. Thank you for watching till now, and please keep supporting. I'm trying to make regular lectures. Thank you so much.